How you doing? I'm Big D. Welcome to the show. We're going to talk about what happens with silver and gold if something happens with the banks around the country and what has happened in history. Now, you might feel that if you have less than $250,000 in the bank, that your money is secure. You're going to always have your money insured. That's called the FDIC insurance, right? But what happens if multiple banks fail at the same time? There's not an unlimited amount of funds to make sure those banks become sovereign and that they're kept whole. So they might use what they call a bail-in. Now, it's happened before in Greece and Cyprus. There was a test bed to see what the general public would do, just like what happened a handful of years ago when everyone was forced to wear masks. I'm not joking. There's a social experiment, and I think a lot of people are going to straight up fail in this one. Before, let's go before, well, let's get into it. I've got some important notes because this is a very stressful situation about what's going on with the banks. And you can see on the Federal Reserve website that there's a lot going on. They tell you if you want to go in and view what's going on the Federal Reserve website, what banks that might be in trouble. First off, they're tight. They're talking about liquidity and they're saying that liquidity is tightening. They say higher interest rates and reduced central bank stimulus means less easy money in the system. That's very true. People are also saying that banks right now have to compete harder for deposits and funding. And you're seeing that everywhere where people are going. You can walk into the bank and there's all these signs that you open a checking account or savings account. They've always done this. We're going to give you this, this, and this. Whereas that eventually even exists after the pandemic. Think about that. The money was flowing so easily through a system. Now banks are freaking out because they don't have people depositing money and keeping the money in the banks so that they can go out and loan out your money and claim the interest rate for themselves. They're also talking about tighter liquidity, making weaker institutions more vulnerable. Now, we just had a bank close down not long ago. It was a small bank in Chicago, and people on the internet were freaking out and saying it was over. That was all a lie, I believe. It was all rumors. It was not true. That bank in Chicago had nothing to do with silver, and they believed it was, and they kept pushing the lie that it was all about silver. It happened about the same time. And it's normal every day, every year banks do close down. And right now we have actually the lowest amount of banks shut their doors because the Federal Reserve is already injecting money through a program to because banks don't trust each other. So we're actually already in a very bad situation. But you don't see it because the Fed is injecting the liquidity into those banks. That should tell you something right there about what the banking system is doing, and they're very weak. If they need money being injected into their bank just to keep it afloat. This is very important because in the last handful of years, we've seen rates rise wherever every bank here. I just read banks they bought large amounts of low interest bonds when rates were near zero. As rates rose, the bond fell, the value fell. None of now, of course, the banks could keep them through maturity, and eventually they'll pay back their original investment plus the interest rate that they agreed to. But here's the problem. Think about this. What if the bank needs it sooner than waiting for the bond to mature? What if they're 10-year bonds or 30-year bonds, right? That is the issue right there. So banks are holding on to a bunch of unrealized gains, unrealized losses, sorry, because the value of those bonds have fallen because interest rates have risen. So that's a very serious issue. Deposit risks are feared right now. Customers can now move money instantly with online banking. And that is why there's such a battle right now over a bill that is going to allow or not allow people to make interest on crypto stable coins, because banks fear that you can go out, deposit a stable coin onto an exchange that allows you to get a good rate of return. And I think right now it's paying near 4%. It's paying as much as a T-bill, and you don't even have to wait. You're getting that percentage rate broken up over every single day, and it's liquid right now. That scares banks because people will figure it out. I can make more money easier putting my money on an exchange like Coinbase or other exchanges in the US and get a real rate of return and have it really liquid. They're scared that this will be a deposit or a withdrawal run on these banks, and that would turn things down faster. They're even saying that if confidence continues to drop in the banks, withdrawals can accelerate rapidly. And we saw this happen with SBB, Silicon Valley Bank, SV a couple of years ago. And this is a real serious threat. And they're also saying that even healthy banks can face threats of withdrawal spikes. So it's not just banks that are in the hurt locker that are exposed to this. I mean, can you imagine? Right now, you have, say, 50 grand in the bank. You're not making a penny on it. Well, very, very little if it's in a savings account. You take it out and you do what I just talked about. Now you're making money on your money. And you can take it out anytime you want. And you're not waiting 10 years or 30 years. You're making money today. I'm going to throw something out to you. Now, if you have money in your crypto and they're paying you, why would you need a bank at all? Because you can take it out and put it in just as fast as you can a bank. And that's pretty much how the payment process works. Or withdrawal. And now the too big to fail debate, is it starting to ramp up? I believe so. People are now questioning whether the government would step in again like in 2008. Remember the bank crash? I talk about this with a few people. Nobody remembers it. That is really odd, to be honest with you. I'm not talking about very young people either. This could go from bank bailout to bank bail-in, which would take some of your deposits, your money, and they would restabilize the bank, and you would, in turn, get worthless bank shares. Who cares about bank shares? That's, in my opinion, not a good thing. And people now are also concerned about the moral hazard. Reducing, rescuing banks, encouraging future risks or risk taking. And you can apply this to the car industry. The car industry, ever since the late 70s, has been bailed out multiple times. 70s, 80s, 90s, 2008. There was some kind of rescue plan that the government came with a car manufacturer rescue. It wasn't let the best car survive, the best car company survive. We've seen horrible things where people were wiped out with General Motors stocks. It was just canceled on them, and then later on the government gave them a bailout, and then later on GM just issued new shares and sold those to pay off the debt. It's absolutely a joke, and I believe you're going to see that actually happen with the banks again. And then you got confidence cycles. And this is really important because a lot of people, after they got really smart, and they got a lot more educated because schools didn't teach them about their finance, economics. They went to YouTube, even guys like me, and went to other places to learn about how the economic cycle works. Now they're starting to be concerned about banking is built on trust. But if headlines spark fear, perception alone can create instability. AI channels are out there, possibly with very good information. But then again, some of these channels, they're just put up there without any checking in to see what the information they're putting out is actually true. It's just crazy what is possibly going to happen, and I believe it's right now that is going on. Make sure that you're in an FDIC insured account. Still doesn't guarantee anything, not in my opinion. If you got more money than what the FDIC allows, I believe it's 250,000, then go up a second account with another bank. Simple things like that, people don't realize how at risk they are. And they're very simple to do. It's important right now. Last but not least, the commercial real estate exposure has to be gone over because of banks. Banks hold loans tied to offices and real estate properties. Failing property value increased at a default risk. These are regional banks. You've got small local banks. Then you've got larger regional banks. And then you have the multinational massive banks like JP Morgan, Chase, Wells Fargo, Bank of America. By any large, your greatest risk to commercial real estate as far as bank is concerned is your regional banks. They are the ones that took out the most and put out the most loans for commercial real estate that have absolutely created in the last 4 years because of companies and because of work at home. and all of the new tech and especially AI. Fewer and fewer people need large commercial. This is one of the aspects of economy that is here to, and it's here to stay. A lot of people are worried about their jobs, and I can see why. I hope you understand that this is where the internet is going. This is where the massive amounts of fear are. And it's not in the media yet, but I'm sure it's in your head and you're wondering banks, AI, there's a lot of differences going on. We have crypto now. The United States could become the crypto capital of the world. As far as Trump is concerned, we are there now. They're trying to pass a new law in Congress and Senate. It's called the Clarity Act. That Clarity Act goes through. There's going to be banks dropping like flies. And when things like this happen, silver and gold are going to increase. So that's why I talk about gold and silver as much as I do, because this is something that is going to keep you sovereign, keep your family safe. This is my opinion only. Please see my disclaimer into this in the description below. Now, people are going to start freaking out when this finally hits. And like I said, it's probably going to be too late if you find out on the media, because central bank media, that's what I'm going to call it right now, they are part of this. They know what's going on. Most of them do. But they're being told to keep their mouths shut. People start pulling their money out of the banks. I did this several years ago. And at that time, it was about 3 weeks. It could have been a little bit longer, but I'm going to say it was about 3 weeks. Fill out the document, submit the document, wait. Finally, my money was ready. You have to order your money. I kept as much money in there to pay bills, to cover my bills, because I'm not taking the chance. And the other thing is, when I started looking into cash is trash, that's when I decided it's going to go into precious metals. Since then, my money has increased substantially because of doing the right thing for my family. I'm not telling you go out and do the same thing. But if the economy fails, they talk about the currency is just, it's very soon from failing. The US dollar, purchasing power of the US dollar is worth about 3.7 cents. And that's on the federal government's websites. You can find this. They actually give you a nice, pretty little graph starting at 1913 when the Federal Reserve began. I'm not making this up. You really should do some research and some due diligence and see what's going on. Put it in something that's been around for thousands of years. Silver and gold. What's going to propel us into the future? And that's crypto. My opinion, of course. Now, hopefully, you got something out of this. And we need to all hope and pray we all land on our feet. And I thank you for stopping in. God bless us. God bless us all. Thank you. And God bless you. Have a great rest of your day.